All right, so Naspers has just had its annual general meeting, and we are joined by Bob van Dijk, the Chief Executive of Naspers. Welcome to Cape Town.
Thank you, it's great to be back.
Yeah.
Hi Bob, you've been CEO of Naspers for 3 years now. What has been the most surprising aspect of the company to you?
I sort of suspected that it would be this way, but this company has a way of never being dull. And what I like most is the ability to move very, very quickly. So the people who are sitting at the center of the company is a small group of people, and allows us to, when we see new opportunity, move really quickly. And I think the amount of change you can bring about in this company in a short amount of time is incredibly exciting.
So let's talk about Tencent. So it's a big topic at the moment in the media, and Naspers reported a profit of quite a substantial amount of profit, $2.75 billion, but then people take away Tencent and say, no, actually it made a loss. And then today, Chairperson Koos Bekker was saying that when you look at the business in this way, it's actually quite illiterate. So I think a question would be is, do you agree with that type of statement, and what is your view and the reasons behind that?
Yeah, I think Koos gave a good example, right? Uber is a startup that's valued at around $50 billion, is losing more than $1.25 billion, I believe. And so I think to judge a hyper-growth internet company by its profitability, it's a very, very narrow view, and it is, I think, a view that doesn't reflect the value of a company. You have a publicly listed company like Snap, still losing substantial amounts of money, worth $20 billion. So to say that a profit in a hyper-growth business is a requirement is indeed a fairly myopic view.
And that electricity, speak more about that. What does that mean exactly? Because people have been writing about this for quite a while this year. It's been a hot topic.
Yeah, I think there's a few things going on. I think there's people who have the desire to write something that catches some headlines, okay. And being good journalists, the headlines get written. The reality is that many internet business models require years of investment before they turn profitable. When you decide to accelerate growth, it often costs more money. It is almost inevitable if you want to build something big that from day one you will not make money. And that's exactly the situation we're in. And actually, for one of our biggest internet bets for classifieds, we're now at that exciting stage where we've invested for several years, and this year we're expecting to turn profitable. And then everything turns around and everybody loves the business. So I think it's a little naive to try to say, oh, you're a growth business, but you're not making a profit in the internet sector.
But with food delivery, video entertainment and social media, Naspers is setting itself up against the giants like Netflix, Amazon and others. What is Naspers' competitive edge, and can we maintain that edge?
Well, we certainly try, right? And I think we've managed for 103 years, so I think so far so good. But we really have to be on our toes. I think that's key. I think there's two things that we've been really focused on throughout the time I've been, but I think for many decades before, is find great entrepreneurs, people who have true spirit for what they're building, support them, and in the end they'll do great things. I think that has allowed us to operate in markets where others find it very, very hard to be successful. So find excellent entrepreneurs, back them through thick and thin, and if you find the right people, you make the great business happen. And lots of big companies are actually much more managerial and bureaucratic than we are. I think the other component that served us really well is that we invest in businesses that have a strong local component. I take our classifieds business or our food business, that really has very significant local operations. And by the time you've established that business well, it's actually quite hard from somebody from California to establish that business in a better way than we have.
Okay, so let's move to the other hot potato, the remuneration policy. So there was that one story I read where they said, all the Naspers execs, they just walk and check the share price of Tencent and then go and play golf. I've also read somewhere else that someone like you, incredibly hot property, and it would be incredibly bad for Naspers if people kept on going on about this and we lost you to the Amazons of the world. What are your thoughts on it all?
Yeah, I think the first point, there's several components. The first point to make is that our loyal shareholders are generally very supportive of our remuneration policy. You see a number of people liking to make some noise. That is really a small sliver of our shareholder base. And our remuneration policy got actually a tremendous amount of support in our AGM today. You'll see the numbers be published very soon. So don't interpret a few loud noisemakers as actually reflective of our shareholder base. I think look at the vote is probably what I would say. The second, really, and I think our Professor Yafta said it well today, the fact that my incentives are predominantly dependent on Tencent is just technically wrong. My short-term incentive is actually for more than half not dependent on anything that has to do with Tencent. Long-term incentive, it's a similar story, so it's just wrong.
Mm-hmm. And I mean, I think a lot of people would say that skill that you bring to the table, the acquisitions, the development spend going out. If we lost that kind of skill set, then where would it leave Naspers?
I think in the end, right, we try to hire the best people in technology, and we compete for that talent with a Google, with an Amazon, with Netflix. So you want to attract people who can actually help that business forward. Competition in this space is brutal. So you want good people, and I think the practice we have of rewarding these people are very normal. I would say considerably more conservative than the likes of a Google or a Netflix.
Well, apart from the JSE listing and the ADR listing in London, will Naspers be seeking a secondary listing anytime soon, and if so, where?
So we have no such plans at this point in time. We've actually taken steps to make our London-based secondary listing more liquid and to actually support our shareholders that prefer to trade there. And I think there's more we can do there. We do look very actively at options. If we think it will really benefit our shareholders to do so, we'll pursue it. At this point in time, I think we're focused on creating a very solid listing on the London Stock Exchange.
So Naspers operates in a VUCA world, one of volatility, uncertainty, complexity, and ambiguity. And now with the rise of anti-globalization, how do you navigate through it all?
I think in the end, there's a few factors that are really important for us. One is we are quite well distributed, right? We operate in more than 100 countries. And it means that even though there might be trouble somewhere, in aggregate, as the world moves along, issues even themselves out. I think in many ways it's actually a tremendous advantage for us. So we don't do a great deal of cross-border business, but we have many local businesses. And what it allows you to do is actually learn from different places. You learn most from your mistakes, but also if you see a business work well in one part of the world, you can take those learnings and apply them somewhere else. So it's actually, I would say, a privilege to be able to see so many different parts of the world, see businesses perform and learn from it.
You've spoken about Naspers' worldwide presence. What about the biggest economy and the home turf of Amazon? Apart from Let's Go, what other exciting developments can we expect from Naspers in the USA? So
the US is not necessarily a target market for us, right? So we've invested in Let Go, which is, it's true, primary market is the US, but it was mainly because we thought the business model is great. We know classifieds by now quite well from 40 countries. I think we know how to do it. And more importantly, we had Alec Oxenford, who is the founder, who we knew well because he's also the founder of OLX, come up with his business idea, and we knew he can build a great business. So we understand the business model, love the founder, and it's obviously a big market, but it's not as if we're looking at the US, what can we do in the US? It's more like when we see a great opportunity, it happens to be in the US, we pursue it.
So why is, and love this question, but why is cryptocurrency such an exciting development? And but also, why can't Naspers jump into that just yet? And also a little bit about AI and where you see it going there.
So I think why cryptocurrency, I think there's a lot of friction in fiat currency and in sort of traditional currency. There's lots of restrictions on it. There's lots of unnecessary costs. So the attractiveness of cryptocurrency, it's basically free to move it around, and there's no middleman, and you can do it instantly without commissions, and that is a tremendously powerful thing. Now, so that's what I love about cryptocurrency. I think the reality is that many cryptocurrencies have that free tradability. They have that instantaneous nature, but they're not stable in terms of value store. And actually, to be function really as a currency, you need to be able to store value, and that's where cryptocurrency is not yet at this point in time. So, I think if we find solutions to stabilize the value of cryptocurrency, I think it will be a complete revolution. Because what you see now, for example, Bitcoin has increased a great deal in value as Ethereum, but that could change as well, which makes it a very, very risky place to place your money at this point in time.
And then Naspers and AI?
Yeah, I mentioned it earlier today. I think the reality is that the three factors that make it sort of obvious why we need to invest in AI. One is that the amount of data in the world is exploding. So, and actually in the last year, more data was created than the entire history of mankind before that. So that's a tremendous factor. But then how are people consuming that data? On ever smaller screens, right? People used to sit behind a computer and use a tablet, and now in our business, 70% of internet traffic comes from mobile devices. And what has also changed the way is how much time people spend on average on an internet session. It used to be about a half hour, and when you go to sit behind your computer in the evening and do a bunch of things. Now the average mobile phone internet session, 30 seconds. So you add these three things up, right? So you have exploding data on an ever shrinking screen in a much, much more condensed time, which means fundamentally you have to make choices for your customers. Your customers cannot pull information out of that swamp of data in a short amount of time on a small form factor. That means fundamentally what AI is going to do for you. They're going to help you make choices in that ever complexer, ever shorter time frame on a small screen.
Bob, I want to circle back to Tencent. One of the reasons I think, and you are welcome to disagree, that Tencent is so successful is because these big competitors that we've been talking about, like Amazon and Facebook and WhatsApp, Google, Netflix, they are all banned in China. On the other hand, you have Chinese censorship and regulation that puts a strain on Tencent. With mobile games, we saw it recently. What is your view on China? And do you ever feel Naspers is too exposed to that complex economy?
I think the best way to put it is if you look at the number of internet users and the speed of innovation, China is by far the largest internet market in the world, and probably the speed of innovation has overtaken that of the Bay Area. So that makes it, if you are predominantly an internet company like we are, the absolute most interesting place to be invested. So do you want less exposure to China? I think the answer is absolutely no. So innovation, the pace of innovation is higher. The absolute market size is tremendous. So we feel extremely good about that.
And then Naspers has invested millions in development. When will e-tail and classifieds start becoming profitable?
So for classifieds, we're very, very close, and we've actually communicated that if things develop well, we're probably this year going to see that business break even in its core. And we invested a good amount of money, and it is very, very encouraging to see that actually happen. It's a good example of what we spoke about earlier, right? It's a business that's been loss-making for a few years and contributed to a development loss, but now it's turning profitable and growing really, really quickly. The perfect illustration of you can't build a great business in the internet without investing some money first. I think in our e-tail business, it's a mixed story. Some of the business are very close to profitability. Like in Romania, we have a fantastic e-tail business called eMag, which we believe has a chance of breaking even this year. Some businesses are earlier. I think Takealot in South Africa is one business we're very proud of. I think Kim is doing an excellent job, but he's going to need a few more years to break even.
Okay, and finally, I'm going to bring up my phone now. I think what we need to do is have a little test here. Okay, so you say that the average user spends about 30 seconds on the phone. So let's try and get your summary of Naspers and where it's going in the next year. If you can try and explain what Naspers is, where it's going in the next year in 30 seconds to your 30 seconds audience, and I'll let you watch it on here so you can know exactly when to stop.
Yes.
And your time starts now.
Breaking out in a sweat.
we see the world's consumer internet habits changing really quickly. We want to take a much bigger space in the minds and in the hearts of the internet consumer in the world, and we want to build great business models that have very strong local components built on excellent entrepreneurs.
And that was 17 seconds. Well, I think your 30-second audience will appreciate that. Thank you very much for your time.
Thank you.
Thank you.